I did this video yesterday in which I ask, is India the next China? And I gave you a list of 10 stocks that I was able to come up through other people's research as to what the 10 most profitable stocks might be in the future. As I look at it, I say if it's going to be the next China, it'll follow the path of China. And the first thing that has to happen in a growing economy is the finances have to be raised. The money has to be acquired so that companies can borrow money to build the infrastructure that they need to make the businesses run. So the first two stocks I'm going to look at real careful are the two banking stocks. And they were number one and number two from the research. So in this video, I want to dig a little bit deeper and see what the difference is between the two banking stocks and which one might I be interested in investing in. I'm giving away $1,000 on Halloween so that you can invest in this down market and make some money off of it. Moomoo is stepping up and they're going to give you 15 stocks if you'll sign up for an account and then fund that account. Now, you must understand you need to fund the account. To get my money, you're going to need to go into the description and sign up for the giveaway. To get Moomoo stocks, you're going to need to go to that link in the description and open an account and then fund that account. If you'll fund it up to $2,000, they'll give you 15 stocks that could be worth as much as $2,000 a piece. So go to the description, sign up for both, and let's get together on Halloween night. From the information I gathered yesterday, it appears that the number one investment over in India right now is HDFC Bank Limited, ticker symbol HDB, currently selling at just under $60. And then I wanted to look, and I got this information from Seeking Alpha, and what its PE ratio is. What its earnings per share is $2.91. Its PE ratio is 1993. Its dividend is 58 cents, which works out to be a 1% dividend, and its market cap is $976 billion. Let's compare that to the number two stock that the research I came up with was talking about, has earnings per share of $1.06, and that again compares to $2.91, has a PE ratio of 1974 compared to 1993, not a big difference. A dividend of 13 cents at 0.6%, and that compares to 58 or a 1% dividend, and then a market cap of 73 billion as opposed to 976 billion. So my take on the thing is that from those numbers, I lean towards HDFC. I then went into Seeking Alpha and copied their description and then read the descriptions, and they're both in the same business. HDFC just happens to be bigger. Then what I did was go to Trading Views charts and copied the chart and compared them. And as you can see, they're all since basically the pandemic on a climb up and a steady climb up. This is a 200-day. This is the 50-day. And so that's on ICICI, and this is then the chart on HDFC. Similar chart, climbing up. This one peeled back a little further. It doesn't have the gap that the ICICI has between the 200 and the 50. But because of the size of it, this is the bank that I would lean towards if I were in a position that I wanted to invest in the banking system in India at this time. On February 21st through 28th, 1972, Richard Nixon went to China and met with their current leader at that time and basically sold our soul to China for cheap labor. And over the last 40 years, China has become our manufacturing hub for anything and everything that we need. As a result of that, we've become dependent on them. As a result of China's ambitions to dominate us and become the economic power and the social power and the military power of the world by 1942, we have been put in a position that we got to find another place to sleep and have our goods and services made. And I am thus in the belief that China is going to fail. Our manufacturing will move away, and India will become the next China. It's a democracy. It lines up more with our ambitions. Its current leaders are anxious to bring us in and accommodate us in any way they can. So I believe that's going to happen. So with that in mind, I look at it and I look at the growth of China and say, okay, if it's leaving China and it's going to India, then India is where I want to park some of my money. And as a result of that, several weeks ago, I bought an ETF INDA, and it's a long-term investment. I then thought, okay, let's look deeper and find out what are the individual stocks that may have some growth potential in India. And my logic is that the first thing that has to happen is the infrastructure has to be built, the factories have to be built, and that all takes money. And that money will come from the banks. And as my research yesterday showed you, the two number one rated stocks by Goldman Sachs and other analysts are two banks. One is HDFC Banking, selling for about $59, as I just showed you, and the other is ICICI Banking Limited, selling for about $27 a share. So with that in mind, that's how I analyze this and say the first step is the banking step. Am I ready to put my money into it today? No, I am not. And again, as I said in the analysis, it would probably go to HDFC because they are the bigger. They have the bigger market cap. They have more history. And so that's where I would go. Not yet, though. And the not yet is, I think, our banking system, and I don't know how deep then these two banks are into the phenomena that has happened over the last 3 years. And that phenomena that I am speaking of here in the United States was the making of 2 million additional millionaires. How is that relevant? Well, before the 2 years ago, there were 12 million that had been made over the history of our investment world. But 2 million were made in between 2020 and 2022. They were made from Tesla, they were made from Bitcoin, and they were made from ARK Invest. I believe they are now going to be foreclosed on. I now believe that their big cars are going to be repossessed because they lost so much of their value. We had $9 trillion come out of the economy, $7 trillion out of the ARK Invest and Tesla, big run up in the market, and another $2 trillion out of Bitcoin. So with that money coming out, somebody is going to be left holding the bag for the disappearance of that money. And where is it going to come? From the foreclosures on houses, cars, second homes, airplanes, from the nouveau rich who are no longer rich. Okay? Unless the stock market skyrockets in the next 6 months and Bitcoin goes back to 65,000 a share, those people are going to be foreclosed on. So our banking system is going to be under pressure. Does that extend into India? I suspect it does. But nonetheless, my knowledge says that country is going to be big once we get this banking stuff settled, because they have 800 million internet users. They have 500 million smartphone users. That makes them second only to China. They have a bigger potential economy than the United States. And you know what happened with Amazon, Google, Microsoft, Apple. Those kind of companies are now going to be built in India. If we believe Peter Zion, China's going down. China's going to starve in the next 5 years. It's got to be replaced by somebody. Okay, you now know who I think the replacement is. You now know who the two banks I'm going to be watching and surveying and waiting to see if I'm right that the nouveau rich ain't going to be so rich and the banks are going to suck it up. That's my take. I'm shorting the banks. I'm shorting the S&P. I'm shorting the QQQs, and I'm shorting China. And I'm going long India. Now, I haven't, as I said, I want to reiterate, I have not dove in on these two banks or any of the other companies. I will look at the other companies. There's a pharmaceutical one that I like that I'm going to dig deeper in a coming video. So that's my take on it. As to Mark, who criticized me and said that I copied and pasted the 10 stocks. Yes, I don't invent anything, Mark. I don't have a fresh idea that says, hey, these are the best 10 stocks in India, because I don't live in India and I don't have the capability of doing that research. And so he said, you cut and paste that, and so I'm going to unsubscribe. Fine, Mark. We all cut and paste. We all deal with other people's information. We merely interpret it based on our knowledge and our experience. And if you got a problem with that, Mark, go ahead and unsubscribe. And as far as me deleting your comments, I don't have a clue who you are. I don't read your comments. Google basically deletes your comments. So, Mark, go away and be happy away. In my group, we will work on my knowledge and my experience, and I'll cut and paste anything I damn please. Talk to you all again tomorrow on a happier note.